Thank you and welcome into this video. I would like to take you through how you can do accounting and accrual adjustment for income. So these usually occur when your gross turnover has been overstated, and accounting and accrual adjustment for expense, it occurs when your expenses, when filing your income tax return, has been understated, and that is the difference. And the overstating of your gross turnover usually occur if your gross turnover for the year includes the previous year turnover, whereas the accounting and accrual adjustment for expense, it occurs when the yearly expense has been understated and you need to overstate it with some amount which has not been accounted in those expenses. So first thing first, in order to account for this, you need actually to do some good bookkeeping, and also you need somehow a tax expert so that he can come and try and visualize and advise you regarding the adjustment. But in order to do the adjustment, you need to declare it under the iTax portal, and to do that, you need to get into iTax by dialing itax.kra.go.ke. You then need to log in using your KRA PIN, which mine is A0. Let me input it, A015 43007A. Then you need to hit continue. So you need to come here and confirm if your KRA PIN is correct. Then you need to input your password. Then you need to do a simple mathematical computation here, which will give me a value of 72. Is it 72 or 73? It will give me a value of 73. And then you need to log in. When you log in, you shall be taken into this KRA interface. What you're supposed to do, just come to where we have return, then come to where we have income tax return adjustments, and then come to where we have accounting and accrual adjustments. So you'll be taken into this interface now. So what you need to do, you need to come here. The taxpayer PIN is input, the obligation is put here. You just need to select the period. So the period which you are doing the adjustment for this scenario is 2025. Then you can upload the audited document in case you have the audited document which contains the accrual, and you can choose them, maybe they are PDF, JPEG, and so on and so forth. Then you need that is where it is called accounting period information. So if you have the audited financial statements, which is the P&L, then you need to continue. So you need to choose the income adjustment type. So the type can be either deferred income, exempt income declared in profit and loss, in case you have insurance contract, others, and prepayments. Maybe you had some prepayment, you can come and adjust here. You can give the description of the income, and then you can come here and enter the amount which you want to adjust. Maybe it is 120,000. Then you can come here, and this total amount will be auto-populated here, and the description of the income which you have here. So you can say this is prepayment. You can come here and enter prepayment of electricity bill, so which is acting as an income which has overstated your income. So you can come here and give us a short description for the year 2024. So you can come here and add these details here, and you can be able to submit these prepayment of the electricity or adjust the accounting income accruals. Then you can come where we have expense. You can do the same thing. It can be occurring from accrual expense, cost of goods from the inventory, leases, minerals, financial instrument and disclosures, financial instrument and impairment, and others. Also transfer pricing. Transfer pricing adjustment. This is where you had intercompany transfers. So you can come here, maybe you choose accrual expense. You can write the type of the accrual expense is the accrual expense for accrual expense for advertisement, in 2024. Then you need to input the accrued amount. Maybe it was of maybe 180,000, and you can come here and add these details here, and after you are through, you can submit in case you are good with that. Then you can come here. Maybe I had done something here at the sheet G. You can come here and adjust to these two values here. So the one for the accrual income was of 120,000, and the one for the advertisement accrual expense was of 180,000. And after doing that, when you come in the T-tax computation, you notice that my liability has decreased significantly. I can show you, because when we remove these figures, you can notice that my liability is so high, and when you input it, you can notice that I have been able to reduce my liability for tax significantly. So this is 120,000 and 180,000 here, and you can see the tax liability has reduced significantly. So you can validate and now submit your return, but this is how you usually do the accrual and expense adjustment. So these, as I have explained, for income accrual adjustment, it means that your gross turnover had already been overstated, and you need to net off that amount. And for accrual adjustment for expense, it means that your expenses had been understated, and you need to net off that effect of the understated expenses which were occurring in accrual basis. So basically, thank you for watching. In case you have any consulting about taxes and you require a certified public accountant, you can consult me using the contact in the description and my email, and we can have a conversation at an affordable fees. So thank you for watching and have a nice day ahead.